number one, risk management. So what is risk management? We have issues with risk management. So when we are talking about risk management, what you need to consider, number one, so you need also to be taking some notes. So when we are talking about risk management, you must ask yourself, how much are you willing to lose before you trade? That is how we do risk management. So before you can do anything, you ask yourself the question is, how much are you willing to lose before you can trade? Before you can trade, you need to know how much you are willing to lose. How much are you willing to lose? How much are you willing to lose? So that is risk management. Number one, you ask yourself, how much are you willing to lose? Then you ask yourself, what is the size of my account? So you can start the size of account. Size of an account, is it a $10? Is it a $20? Is it $30? Is it 50 or 100? Now, out of 100, how much are you willing to lose in one trade? In one trade, in a single trade, how much are you willing to lose? That is the risk management. So, risk management, how many pins are you targeting? We trade pins or bars. These are what we trade. If you are catching the strikes, you need to know how many strikes are you targeting. Are you targeting 1, 2, 3, 4? Are you targeting one, or are you targeting two of them? You don't just trade blindly. So these are some things that you need to consider as you are setting your risk management. How much are you willing to lose? When it reaches that, you cross. So there's also what we call, for example, let me go here. For example, here, this is, are you able to see the screen?
Yes, sir. Yes.
You are able to see the screen? So for example, you want to catch the strike. This is a crash 1000. Now you are expecting the strike to shoot from here. There are three confirmations. Those who have been learning, we know some of the things that we need to consider how to catch the strike. There are three confirmations. Number 1, 2, 3. So you are expecting it to shoot here in the future where the price is going. Have you seen where I'm pointing here? Have you seen where I'm pointing here?
Yes,
have you seen where the pointer is here?
Yes, sir.
This is where you are expecting to shoot. Now, you ask yourself to say, now, if I enter, because if it will shoot from here, here, you need to remember that when the price it is going near the support, it can shoot even before it reaches the support. So that is why we enter a trade not on this exact point. You can miss the strike. So you consider the risk ratio. When you enter from here, how many candles should you wait for it to shoot? Can I manage to wait up to 20 candles, 20 pins? Pardon? Can I manage to wait up to 5 bars or 6 bars or 10 bars in loss while I'm waiting for it to shoot? That is risk management. Is it making sense?
Yeah.
So you don't just enter blindly. Now, you also have to ask yourself, now if it will not shoot from here, it is not just that it can shoot. Maybe it can just strike a small one, it reaches here, it will just hit a small strike. Now, you must ask yourself to say, if it not shoot from here, the last point where it will shoot, it is here. Here on top. The lastest of last, it is there on top above there. Now, can I manage to wait from, if you don't shoot from here, can I manage to wait from here? So where we are expecting to shoot, it is at below 61%. So below that one, so we're expecting to shoot at 60%. So now, if it not shoot here, can I manage to wait up to 50%? So that is the risk ratio that you ask yourself. Is it making sense?
Yeah, it is.
So someone was asking about the risk ratio. These are some things that you need to consider. Also, some of the things that we must also consider when it comes to risky, it is also you need to consider the number of positions that you need to open. You need also to consider the lot size. You need to consider the lot size. So most of us, we usually abuse accounts. That other time I was saying that trading, it is for rich people. It is not for poor people or broke people like you and me. We are broke, we are poor. Forex, it is not for people like you and me. The only reason why you and me we are trading, it is because of the brokers. The brokers are the one who have come in to allow that even retail trader can also take part. Because the $10 can't take you anywhere. It is too small. The market is so big. It has a lot of things that happens. So just like a 10, you can be out as soon. So no wonder you must use proper risk management. So when it comes to lot of size, if you have 100 account, one position it is better. 100 account, one position it is good. That is risk management. Remember, don't risk more in a single trade. Most of the time we open a lot of position in just one single trade, but you still have the whole day. Are you seeing the mistake that we make? You have $100 account, you open 3 position of 0.20, again 0.30. When it strike or when you make profit, you'll be happy. But remember, not all days are Sunday. Not all days are Sunday. So you need to consider all those. You need to consider all those. That anything can happen, it can't shoot. But how much am I risking? No wonder there they will even tell you to say there's where you will see free margin. Free margin. It is the amount of money will remain in case the market goes against you. Now, if you have a small account, you risk much, you discover to say you start you develop fear. You even cross a trade prematurely. So these are some things that you need to consider when it comes to risk management. I don't know the person who asked about risk management. Is it clear?
Yes, it's much clearer. Thank you.
Okay, we pass from risk management. Now we come to the issue of chart. The issue of chart, especially only the lower time frame. So let me just share. So what you do, for example, what you do is When you
sorry, coach, can I take you back a bit? So when you say risk management, when you say if it doesn't shoot on the first position,
yes, come. You can come in.
or you completely close and say, okay, I'll do another opportunity.
So what I'm simply saying is that risk management, it is before you can even enter a trade. You must plan your trade in advance. Are we together? So let's say, for example, here,
Yes.
you are expecting the strike to shoot from here. Here. 1, 2, 3. These are 3 confirmation. You are expecting to shoot from here. Now, you don't just aim to say, okay, it will shoot from here. Now, in case it does not shoot, maybe in case it just shoot like a small strike, then you're already in the market. How is your account? Is the account so big, or can your account allow you to hold a trade even to reach from here for it to shoot up to here? Then if it is a no, it can't allow. When it shoots like a small one, you cross, then you wait on the light point. Are you seeing what risk management means? If you can hold. If you can't, just cross. You expect it to shoot from here, it did not shoot. It is better to lose a negative 20, a negative 2 or negative 3 than holding a losing trade up to negative 10. We don't revenge the market. And always remember that the market, it is always light. Is it making sense?
Yes. Yes.
Okay, so should I proceed?
Yes, please.
Okay, now, these lines that you are seeing, red and green, these are support and resistance. We'll talk about them when it comes to that issue of support. Okay, now, when it comes to the issue of the chart, this was what my reader Christopher asked. What should you, the issue of the chart, especially the time frame, the lower time frame. So before you can trade, before you can enter in market, you need also to understand what kind of a trader are you. What kind of a trader are you? Are you a day trader? Or you are just someone who just enter within 2 minutes out, 3 minutes out? Who are those? Huh? When you enter just within 2 minutes, you are out. Again, in 2 minutes, you're out. What type of a trader are you? Scalper. So if you are a scalper, behave like a scalper. If you are a day trader, behave like a day trader. Some of us, we make things opposite. You are a scalper, but you want to hold a trade as if you are a day trader. In the name of that holding. You can only hold up to 20 bars. I mean up to 20 bars, yes. 30 minutes. It can't go more than that. So you must identify yourself. So for example, when you're looking at the chart, before you can enter, when you are still a scalper, when you're a scalper, remember, you don't trade in longer time frame. You trade in short time frame, starting from M15, M30, M15, M5, M1. Those are your area of interest. H1, H2, D1, 1 week, 1 month, those have no issues with you. But you only look at them to just guide you how the market is behaving. But your interest, it is in M30, M15, as well as the M5, M1 you enter. You don't enter in M15, you enter in M1. I'll talk about that. So let's say we'll start with you want to enter. Number one, how to identify a trend of the market. Always use 1 week. Always go on 1 week time frame. Is it making sense? Every time you want to check a trend of the market, always go to 1 week time frame. 1 week time frame, it will give you a trend of the market. So when you look at this one, starting from here, when look at it like that, we see that it was an uptrend when it was from here up to here. Now this time around, it is a downtrend. Are you seeing it? From here up to here, are you seeing it?
Yes.
So now this is how it has now it has started. It is just going down, down, down. Now remember, your focus, it is not all these are useless on top. All these are useless. Are we together? Your interest, it is here. It is here. Are you seeing this small part here? Let me try to zoom it. It has ended. This last part, have you seen this last candle here?
Yes.
That is your interest. All this that you are seeing back, this is just history. This is like a candle. This is like a candle that we are looking at as we are speaking right now. And when you look at it, it is like a small candle. It has been eaten. So we'll talk more on when it comes to candle. So now, having that in mind, let us go to D1. When we go to D1, this is like a candle that we are talking about. What color of this candle?
It's white.
White. Then this is green. So in this case, who are white? Have you seen green? Have you seen the green bars?
Yes.
Who are the green bars?
The buyers.
Who are the white?
The sellers.
The sellers.
Let us go back to D1. Let's go back to D1. Who are the white here?
The sellers.
I want you to speak with confidence. Who are the white here?
The sellers.
The green?
Buyers.
The green.
The buyers.
Let us go back to D1. Who are the white here?
Buyers.
The buyers. Now, when you look at this candle, it is different from this candle. Do you compare? Have you seen these two candles here?
Yes.
So this, when you see a bigger candle, it means who are the white?
The sellers.
It's simple. When you see a bigger candle and when you look on top here, there are small shadow. So these small shadows, these are section. It can be 1 week, it can be 1 week, it can be 1 month. Okay. Now, since we are looking at it in 1 day, so we are looking at the all day. The all day They were in control. Who are the green? I mean, who are the white?
White are the sellers.
So meaning the whole day, others have said the bars, the whole day, the sellers, they were in control. But when you come to this candle, who are in control? You see that it has been eaten. It was a big one here, but as you can see, it has been eaten. So who are in control?
Buyers are moving.
So buyers are the one in control at this particular time. They have eaten this candle which was up to this time. So meaning, even if this time, as you are seeing, the buyers are the one who are controlling this. No wonder you are seeing there is a lot of buy than sell. Have you seen the buys? Have you seen the buys?
Yes.
Have you seen buys? Have you seen how it has been buying?
Yeah.
Christopher, are you getting what I'm saying?
Yes.
So meaning, if you are catching the strike, so you have already looked at the longer time frame. You have known to say there is more buy opportunity than sell. So meaning, if I'm trying to catch the strike, there are less opportunity of catching the strikes. There are more opportunity of buy. No wonder even here it has penetrated. Have you seen? It was supposed to shoot here. Now, simply because there is more pressure with the buyers than the sellers. So the sellers, even on the good point, it can take time for it to shoot. So you need to consider those. So it is applying to risk management. So if you are clever, you say, better I just concentrate on buy than sell. Is it making sense?
Yes.
Yes.
Now, having that in mind, my reader, what you do now, let me use another screen, the phone. Since you are used with the phone, is it better I use the phone?
Yes.
Okay. So we have identified that. So let me now just use, let me cross this. I use the phone for the screen.